Good afternoon. This is Rick Ackerman, editor of Rick's Picks. We take a look at the markets every Tuesday and Thursday afternoon, usually. And today I want to have a look at silver and gold. Both are going bananas, and this is certainly long overdue. We're recently up through the highs that were made back in 2011. So these are very significant things that are happening in bullion. It's possible now, given the strength of the move that we've had in recent days, to get more ambitious with some of the targets. I was using a target of a smaller pattern than the one you see here at around $26.90 some cents for silver basis the COMEX September contract. But right now, the way this thing is moving, I'm going to give you minimum upside over the near term to 27.010, $27.01. Those of you who have been watching these presentations are very familiar with the red line. Probably no session occurs without my mentioning it, and it's always a factor in whatever we're looking at. In this case, if we should see silver basis September COMEX pop through that 27.01 midpoint hidden pivot resistance, it would shorten the odds of a continuation of the move up to $31.56. So on um, a percentage basis, that's quite a gain. You're looking at something like over 18% or so. And I think this is going to happen within a relatively short span of perhaps 10 to 15 working days. So again, the big test will be at $27.01, the minimum upside projection from here. And if we get a stab through it the first time that buyers encounter it, that would be very bullish. Let me show you the corresponding chart in gold. And here, just off to the right side of the chart, let me squeeze it down so you can see what we're looking at. The point A low starting point of my pattern is not perfectly clear. I'm using something that is really just a little nub in this. I like a more distinctive low, but in this case, it's really the most distinctive bar that we have to create a low. And so that I think this rather uh, lengthy, this elongated AB leg, A, B, C, D, is valid. So assuming that's the case, we could see upside in gold to $2,122 per ounce. Not too bad when you consider that as recently as this July, we were just trading at 1800. So we'd have a 15% gain there over the space of a bit more than a month. Not too bad. But as was the case with silver, the key uh, resistance is at 2032. That is also my minimum upside projection right now, and that is basis the October COMEX gold contract. So again, we've got at least 20 bucks of upside to get us to that resistance. And if we get a decisive push past it on the first try, you're going to see some fireworks perhaps, but even if not fireworks, we'll see gold ascend to that 2,122 target. And if and when we get there, we'll look at some larger patterns which project significantly higher than that. But we take it one step at a time, really, so that we can trade the smaller patterns with less risk. One way we do that is using something I mentioned here. It's called the mechanical entry setup. And if you want to learn more about that, I would just suggest dropping by the Rick's Picks trading room. Uh, if you are not a subscriber, you can do that by simply going to the home page, rickackerman.com, and clicking on trial subscription. You'll get 2 weeks for $1. That will get you into a chat room that I would warrant is one of the best in the world. We've got traders from everywhere just weighing in real time with some great and timely trading ideas. So be sure to come in and say hello and have a look around because there's a lot of things going on there. Some great traders there all the time. So with that, I'm going to bid you a very pleasant good day, and I will be talking with you again on Thursday. Until then, happy trading.